Heavyweight stocks pulled the Nifty lower after a brief opening surge past the 21,750 levels. HDFC Bank and Reliance Industries exert the largest pressure, and the broader market sees deep cuts, with the mid-cap index falling nearly 2%.
The high-flying public sector stocks see some profit-taking after many days of a rally. Stocks in the railway space like IRFC, Ircon, RVNL, Realty and RITES are under the most pressure. The Nifty PSE index is down over 1%. Public sector banks also lower, with that index down 1.5%.
Zee-Sony merger terminated. Stock slumps 25%. Brokerages sharply downgrade their rating and price target on the stock. Sources tell CNBC-TV18 that Zee sent two proposals as alternatives to Puneet Goenka's position, but Sony informally rejected both these proposals.
And the Prime Minister Narendra Modi announces a scheme to electrify 1 crore households with solar electricity. Market awaits more details. IREDA management tells CNBC-TV18 that RAC will be the nodal agency to implement the scheme.
Hello and welcome. You tuned into Business Lunch this Tuesday afternoon. I'm Nisha Poddar. With me, as always, is Pavitra Parekh. So, Pavitra, afternoon. It's quite a truncated week with a surprise holiday on Monday. But then, market is showing extreme weakness, especially at lunch hour, almost racing towards 1% loss when we look at Nifty 50. And this is after the initial surge that we saw in the market opening. So, look at that particular counter, and a large part of the Nifty 50 pressure of 200 points cut now is coming in from some of the biggest heavyweights. Sensex 2 is down over 600 points at the moment. Mid caps are hugely underperforming the key indices, over 2% down in trade, and Bank Nifty 2 is very weak in trade, 1.75% down. Some of the big banking heavyweights like the largest bank, SBI and HDFC Bank, they are the ones which are biggest drags, along with Reliance Industries, the heavyweight. So these really account, along with HUL, Axis Bank, some of the big draggers coming in for the market. On the flip side, though, some of the pharma counters like Cipla as well as Sun Pharma and even Bharti Airtel, they are the ones which are still holding on strong with key gains. Advanced decline ratio heavily in favor of the declines, Pavitra.
All right, like you said, the market is definitely pulling back quite a fair bit, on a day like today. So you have a very weak advanced decline also. It's at over almost 1:4 right now. So almost 485 stocks which are advancing for over 1,700 which are in the red right now. That is how the advanced decline looks. A lot of the banks, also Reliance, seeing a sharp cut right now. And today you're also seeing big drags coming in from the PSU pack. Of course, this pack has, flown quite a bit, but names like Coal India, BPCL, ONGC, all around 3 to 4% lower. But this is the market where good earnings are being rewarded. So whether you look at a Cipla, whether you look at a Persistent, ICICI Bank, all of these doing well. But on the downside, you have names like IDFC, First Bank, Oberoi, which are all seeing a sharp cut. Like we were pointing out, that entire railway pack is down today. You have a lot of the other PSUs also, 8 to 11% in terms of a cut. But of course, these stocks have seen a big move higher as well. So a little bit of correction over there. That is the shape of the market. But let's kickstart the show now by talking about the big story. It is a dead end for the mega merger of Sony and Zee Entertainment in what was the final nail in the coffin for the breakdown of the deal. Sony has terminated that deal. We have Nisha joining us. Nisha, you've been tracking this very closely ever since, for many months. And then, of course, yesterday was a busy day as well. But take us through what really happened and what are you picking up from sources? So
the twists and turns, Pavitra, in this particular, deal has been much better than any television drama that Zee and Sony Studio can ever produce. Let me bet on that, really, because there just has been so much that transpired behind the scenes. What we have gathered from sources with direct knowledge is the actual breakdown was just based on an informal verbal proposal that was made by Sony. So Sony never wrote formally to Zee Entertainment about the change of heart in the minds of Sony for the Puneet Goenka's position in the leadership position. And so we gather from sources with direct knowledge that Sony had sent an informal proposal and verbally communicated that. And to that, Zee had sent two proposals which were both rejected. Let's take you through the two proposals. First was to implement the merger in the original form and also then jointly search for an independent CEO. And on the other hand, when that was rejected, it was proposed that Puneet Goenka will step down from the executive role but will retain the board position. That was rejected by Sony, and Zee revised this particular proposal to a board position by appointment of a nominee director. And this was done because the shareholders, about 49%, remember 51% would have been with Sony, so 49% had entrusted their faith on Puneet Goenka as the MD and CEO. So to safeguard their interest, this particular proposal was given. After rejecting both these alternatives informally, Sony went ahead and called off the merger. Legal experts who have been directly involved in this transaction have shared with us on condition of anonymity that the informal proposal was by Sony was to avoid opening renegotiation of the deal clauses. It was a completely commercial decision because opening a formal negotiation for change in clause would have also meant compensating the other partner for agreeing to the changes which were sought. We have written to both the parties, but we haven't got any formal reply on these developments, Pavitra.
Okay, Nisha, thanks for summing all of that up for us. I mean, Zee has been hitting lower circuit after lower circuit, still almost, 28% lower on Zee end over there. But, with Sony pulling the plug on this big merger, this brings the focus on the stake of mutual funds and what kind of positions they had in Zee. So we have Pharma here with the details. Hormaz, I think a lot of people were hoping that this would, work out and it would lead to a big re-rating on the stock.
Absolutely, and that is what the brokerages were highlighting as well, right? That this merger was supposed to be the big re-rating trigger for Zee Entertainment, considering all the headwinds and all the drama that had happened before the deal was announced with regards to the promoter pledges and all the cash conversion from the business, the promoters selling stake and so on and so forth. So this was supposed to be the big trigger, and in hope of this, the mutual funds of India have constantly increased their stake in every single quarter since the merger was announced in December of 2021. Now, at the time of the announcement of the merger, the mutual funds held around 12.1% stake in Zee. Now, come December 2023, 2 years later, that stake is now 32.5%, and there has not been a single quarter since the time when the mutual funds did not increase their stake in these 2 years. Now, which are the funds that have the maximum exposure here to Zee? There is ICICI Prudential, where their Value Discovery Fund has close to 7.25% stake. Nippon India Multi-Cap has a 6.1% stake. HDFC Mid-Cap Opportunities Fund has a 5.25% stake. Kotak Equity has a 2.5% stake. And there are other funds like Aditya Birla Sun Life Arbitrage, Tata Large and Mid Cap Fund and HSBC Value, which also have close to 1.5 to 2.5% stake. Now, at the same time, the increase in the stake of mutual funds has happened when Zee's largest shareholder at the time of the merger, which is Invesco Oppenheimer, pared their stake and bid a gradual exit from the company. Now, at the time of the merger announcement, both Invesco and OFI Global China Fund were the largest shareholders in Zee. Both together had around 18% stake. Now, Invesco, through their development fund, exited in April of 2022, and OFI China first pared 5% stake in December of 2022 and then made an exit in April of 2023. Now, besides these mutual funds, there are also listed insurance companies which have stake in Zee Entertainment. Both HDFC Life and SBI Life have stake, including and also having stake in Zee is India's largest insurer, which is LIC. That also has around 5% stake in Zee Entertainment. And since the time the merger was announced, the Zee stock price was around 350 rupees. Since then, it has not retested that price ever since that merger was announced. And as of closing on Saturday, it was at 230 bucks. Now at 30%, biggest single day drop on record. Things not looking good for Zee Entertainment whatsoever.
All right. Thanks so much, Hormuz, for giving us all those details. And the stock has plummeted 30% on the merger being called off, the largest single day fall for Zee Entertainment stock. Let's now get you updates on Hero Moto's latest launch. And Hero MotoCorp has launched the new Extreme 125R. The new edition is priced at 95,000 rupees, while the ABS variant is priced at 99,500 rupees. Now, the new Extreme 125R has a new engine and offers a mileage of 66 kilometers per litre. The new motorcycle will be available from 20th of February.
Okay, so those are the exciting visuals. But with that, we do need to get into a short break. Up next, Prime Minister Modi leads the much-awaited Ram Mandir consecration ceremony in Ayodhya. We're going to get you more details and all of the action in just a bit. Coming through from Ayodhya, where the much-awaited Pran Pratishtha or consecration ceremony of the Ram Janmabhoomi temple in Ayodhya has been completed, fulfilling what has been claimed as a 500-year-old wait for the homecoming of Lord Ram. It also brings to a finality a decade-old project of the BJP just months ahead of the elections. Prime Minister Narendra Modi, who led the ceremony, said that January 22nd is not just a date on a calendar, but the dawn of a new era.
And India Inc. captains turned up in full force in Ayodhya for the Ram Temple ceremony. And Reliance Industries Chairman Mukesh Ambani, Bharti Group Sunil Bharti Mittal, Kumar Mangalam Birla of the Aditya Birla Group, Tata Sons Chairman N. Chandra were amongst the dignitaries. Now, the Ambani family has made a donation of 2.51 crore rupees to Ram Janmabhoomi Trust. Remember, Ayodhya has already been touted as a tourism powerhouse. According to a report by Jeffries, the temple town could attract over 50 million tourists in a year, and the report highlights that the $10 billion Ayodhya makeover is now set to transform the ancient city from a sleepy town to a global religious and spiritual tourist hotspot.
Okay, picking up on that tourist hotspot, let me bring you a very interesting conversation. Anuj just traveled all the way to Ayodhya and he spoke with Ramdev Agarwal. It was a wide-ranging conversation, but they began by talking about the possibility of religious tourism really booming in India thanks to the Ram Mandir. So listen into that.
So we are at the banks of Saryu River and we are feeling as if we are on the top of Himalayas. Absolutely foggy. Wonderful it is. I think the day is expected to be bright and sunny. Temple inauguration was absolutely picture perfect. Modi ji came, Yogi ji came, all the trust authorities, logistics. Main important thing is they have international quality airport and roads are beautiful. I stayed in Aditya Bhavan. They are also very good. So all the facilities are good. And the riverside is developed very well. I think this city is on the way to become one of the spots in the country, and it will rise like rocket, I'm sure. And so I think a new temple town is in making. Of course, Ayodhya is an old town, but now new Ayodhya is coming up around the temple and the kind of people who are going to come. So it's going to be interesting to see how this city rises and what the authorities do to harness the potential of religious tourism.
Absolutely. You got a chance, of course, to see the temple with the UP Chief Minister Yogi Adityanath, and he was there, of course, with the entire industrialist lobby. How was that experience?
That was, I think we reached there by 9:30, and actual function happened about 2:33 or something like that. So it was 6-7 hours of this thing, beautiful in the open on the backdrop of the temple. And when the temple got opened, it was the first. We were the first round of 2,000 people to enter, and it is fully decorated. I think it will be some time. It was most special occasion. So right now, I think temple is decked up with all kinds of flowers, beautiful flowers, and this weather. So I think it's a very unique darshan, and we had a peaceful darshan out there. I went twice actually, and I mean really, I think what I would say, a great place is has come into being. Yeah,
Absolutely.
It's a historical moment.
Absolutely historical moment.
All right, our colleague Anuj Singhal is right there, and he also caught up with Ashish Chauhan, who's the CEO of National Stock Exchange. In a freewheeling conversation on wide aspects, in that conversation, Ashish Chauhan spoke about his experience in Ayodhya and also on the infrastructure of the temple town. Listen in.
No, it was wonderful. It was unparalleled, and I consider myself very fortunate that I was invited to the event for the consecration of the Ram Lala's idol in the temple, and it has been one of the greatest experiences of my life. Yes.
Okay, and of course you were in conversation with all the biggies over there, all the industrialists over there. We saw the Ambani family was there, Kumar Mangalam Birla was there, the who's who of corporate India was there. What was the atmosphere there like? What was your conversation with them?
In some ways, all of them had come as pilgrims, and so in a way, you would have seen everyone was sitting on the ground, of course on chairs, but everyone was basically in some ways there for their respect for the Lord Rama, and that's where I think in some ways there was nobody high, there was nobody low. Everyone was equal in their feeling for the God.
Do you plan to come again to Ayodhya?
Of course, I think overall the flight is direct now, and although only one flight from Mumbai today, but probably it will increase, and the infrastructure is brilliant. What I was told that there are not much infrastructure in Ayodhya. When I came here, I've been positively surprised, and arrangements have been phenomenal. Kudos to the UP government and also everyone who participated in making these arrangements. It has been seamless for most of us who were invited and who came here. But I'm sure today onwards, all other pilgrims also will be able to find great infrastructure with 4-lane inside the cities. Normal Indian cities don't have those kind of wide roads, but you can see that in Ayodhya, and also the larger roads are like 6 or 8 lanes. It's pretty well done.
All right, those are all of the interesting conversations from Ayodhya. But with that, we need to get into a short break. But as we do that, Money Control has beaten Economic Times, making it the clear digital leader in business, markets and finance news in India. It has surpassed ET in major rating categories according to the latest viewership data from ComScore, which measures digital readership. Money Control dislodges ET as number 1 in terms of unique visitors. It is double in terms of page views to ET, showing far greater stickiness. Money Control is also more than 4 times of ET in terms of time spent, showing much greater engagement rates.
Welcome back. Straight to the global developments, and tensions between Israel and Hamas continue to intensify as Israel's Prime Minister Netanyahu rejects the conditions presented by Hamas to end the war and release the hostages. Meanwhile, US and the UK force operate new attacks against Yemen's Houthi rebels. CNBC's Dan Murphy gets us all the details.
US and UK forces conducting a second major attack against Houthi rebels, striking 8 sites in Yemen in a bid to stem the rebels' attacks in the Red Sea. The Houthis have been disrupting the major shipping route in support of Palestinians in Gaza. And it comes as Israel launched its most intense bombardment of southern Gaza since the war began. The US urging Israel to protect innocent lives in hospitals as troops stormed a hospital and put another under siege as they advanced into western Khan Yunis. Gaza health authorities say more than 25,000 people have been killed in the enclave since October. There's growing calls for the creation of a Palestinian state as well. EU foreign ministers meeting in Brussels saying it's the only credible path to peace and expressing concern over Benjamin Netanyahu's rejection of a two-state solution. But Israel's foreign minister, Israel Katz, had other plans at the meeting. Even with a brutal war unfolding for almost 4 months, Israel on trial for genocide at the ICJ, 25,000 Palestinians killed, homes and hospitals being turned to dust. He came to the meeting with no plans for a ceasefire, no plans for getting hostages released, and definitely no plans for a Palestinian state. Instead, the New York Times reports that Israel's foreign minister walked into the meeting and presented a plan to build an artificial island off the coast of Gaza. It is a plan so ridiculously off-piece that it's already been shut down and dismissed since he first started floating the idea more than 5 years ago. Meanwhile, Axios reporting that Israel has proposed a 2-month pause in fighting. It's part of a multi-phase deal floated through Qatari and Egyptian negotiators that would include the release of all remaining hostages in Gaza. On Monday, relatives of hostages stormed a parliamentary session in the Knesset, urging lawmakers to do more to bring their loved ones home.
All right, that is the latest from the conflict in West Asia, but we have to wind down on the show on that note with the news that the markets are really not looking good. It's an 1,100-point cut on the mid-cap index. The Nifty banged down almost 900 points. Thanks for tuning in. We have Mid-Cap Radar up next.